Hello everyone, Shiva again here. It's a beautiful Saturday here, and I'm sitting outside on my balcony. And I thought I'd create another video for all of you. Now I'm going to go against the trend here. Oftentimes you'll find articles and even videos that discuss things that you should be looking for or should be doing when you're doing binary options trading. I'm going to go against them and talk about some things here where things that you should not do when you're trading binary options. Okay, now at the top of the very list, and I know you guys are probably tired of hearing about this, and oftentimes people will say, don't get emotional, but no one really tells you how not to get emotional. It's normal, absolutely normal to have some sort of emotion come through because it's either elation after you see that green flash and say one, or it's sadness when you have a losing trade, whether it be demo or live, or you're so darn nervous because you do know it's your money that's going on the line. So know first of all that it is okay to get emotional. What you're trying to do though is not let that affect your focus. So in short, it's the same. When you do enter a trade, it's all about ensuring that you've done absolutely everything possible during your analysis phase to ensure that this trade has the highest percentage rate of winning. That's it. Now, you've also got to be very aware of how risk averse you are. And this is the reason why I say to people at times, well, think about it this way. If you were to jump online now, or the markets are closed now, but when the markets are open, if you were to jump online and put $1,000 down on a trade, how would you feel? Especially, say, for instance, if that's an hour-long trade, how would you feel? Would you be jittery? Would you be nervous as hell? Would you be in a state of mind where you can't do anything else because you're banking on it? But let me think about it this way. What if you won that trade? How would you feel then? Would you be just super elated? Would that be the cause to carry you forth into your future trade? What if you lost that trade and that realization sunk in that, hey, I've just blown $1,000? A number of things will happen there. Okay, if you've won, you may get into a state of mind where you become more cocky, and in doing so, you probably start cutting a few corners because you're like, hey, I'm pretty cool at this. I've done this trade. I've won $700. I did $1,000 trade. If you lost, you might have this additional degree of fear inside of you to say, I took this trade, I've lost this money, and I'm now scared of taking another trade. Now, this is where they say get rid of the emotions, because the idea is for you to just have complete focus. It's almost like, when you're in a relationship with someone who's emotionally unavailable. They're present, but they're emotionally unavailable. So, a number of things that I do to not get emotional is this. Prior to a trade, I will actually sit down for a few minutes and just quiet time, have quiet time, empty my mind. Yes, I do the whole thinking about my three perfect trades and visualizing the green flash and the one show up. But beyond that, it's about feeling myself. Am I complete within myself? If there's something, if there's issues at home, someone's annoyed you, I've got to balance that within myself, because if I then carry that to my trading session, then that could affect me in so many ways. I could get alpha, for example, and take really cocky trades, and instead of my three perfect winning trades, I may lose them. Or what I may find is, if I jump here onto MT4, is I may start to look at things like this and say, hey, this is not quite touching Bollinger Band, but it's okay. Stocks are down here somewhere, and I'll just jump into that trade, and then it may end up not winning. And then I look back and think, hey, Shiva, you're an idiot. You broke your own criteria, and so you end up losing. Okay, so it's extremely important when you look at this in a way where it doesn't matter to you whether you win or lose. The whole idea is to win, but you're not actually applying energy into the whole emotion. Don't feed the emotions. Other techniques that I tend to use, on a quiet day again, grab a piece of paper, write down in that piece of paper everything that you fear. You know, your losses to money. What will happen if you can't make this money? What will happen if you lose money? What will happen if you feel like, you know, this is overwhelming? I can't do this. The graphs look alien language like to me. Um, what if I do win but I can't sustain it? You know, all of those things. These are attachments that we have, energy attachments, and they can actually trigger off emotions within us. So write all of these things down, look at it, and then you could either burn that piece of paper, you could rip it up and throw it away. But because you're now consciously aware of what it is, about 80% of it, I find, is then released. You start to feel differently about it. The other thing that I want you to do is this. I want you to grab, you know, whether it's $100 note, a $50 note, have a good look at it, have a good feel for it. Okay, because if it's a $50 note, for example, and you're doing $50 trades, you're looking at that $50 and thinking, hey, you know, here's a $50 note. I could, if I just threw it away, how would I feel about it? Or you can pick it up and say, you know, this, I'm holding it, I can feel the energy of it, and this is going to allow me to make another $33 or $35 out of it. I'm going to, see what I'm getting at here? It's you're valuing that cash because, you know, this is online. What you find is that you're just looking at an electronic sum, but if you're holding that note in your hand, you're valuing it. Oftentimes, you know, a forex trader um, that I used to work with, what this guy used to do was this. He'd have $1,000, $20, $50 notes, and he'd have that sitting on his desk. And he'd say, you know, what I'd do is I'd look at that constantly when I'm making decisions, trade decisions. And it'd be like, I'm looking at it knowing that's what I'm playing with. That's real money that I'm playing with. And in my mind, I know what I can actually buy with this. And so he goes, it prevents me from making stupid decisions, taking silly trades, because I'm looking at it and thinking, well, hey, this is real money. You know, I take a $50 note and he goes, oh, he gets paid good money. So he's like, you know, that's half an hour's worth of work for me. So, you know, when you start looking at it that way, and next time you say, okay, I'm just going to take a cocky trade and do throw $25, $100, or $500, whatever it is, you're going to think twice about it. And gradually what you find is that your trades become more dry. And by that I mean less emotional. There's less triggers within you. You're not attached to the win. You're not attached to the loss. You're not attached to the money. You just simply value it. Okay? I hope that helps. It has worked for me in the past, and it has worked for other people that I've shared it with. Okay. Second thing not to do: do not chase trades. Um, Often, I think people jump onto this and they think, if I can do 10 trades, if I can do 20 trades, then I can make a lot of money overnight. The idea is not to make a lot of money overnight. The idea is to perfect your strategy so well that you know you can get up in the morning and at some point throughout that day, you can nail 3 trades. Nail 3 perfect trades, and then, you know, gradually, I guarantee you, if you follow this approach, within probably 30 days or so, you might have built up your account to a point where you're doing 3 $250 trades, or 3 $500 trades, or even 3 $1,000 trades. When you think about it that way, then you know that this is going to exponentially grow for you. Imagine being able to just do 3 $250 trades. That's $600 return every single day. Now, if you did that just for 4 days, that's $2,400 for the week. Okay, and your work might only be for like an hour a day or so. So this is where I'm saying don't chase trades, because every single person that I've known that has chased trades, they've ended up losing money. And oftentimes, you know, you will hear statistics. People talk about 98% of traders out there lose money. There's only 2% that actually make money. And they're not I guarantee you they're not making money because they're smarter than you, or they know something better than you. It's just simply that they've learned from their mistakes and they realize that more is not necessarily better. Okay, so your goal is to perfect your trades, perfect your ability to trade, and perfect your ability to spot things that other people possibly can't. You're looking at things that you say, hey, this may not work if I jump in. It's always better to miss a trade, whether it be successful or not, than to actually trade and lose money. You've got to know that zone that you're in, that feeling that you get when the trade wins. And that's what you're constantly just going after. But you're never chasing a trade. Keep that in mind. The third thing, extremely, extremely important. I myself am guilty of this many, many times, and I've been punished for it. As I say, I think I posted on Facebook as well that those losses are a paid lesson. And if you don't pay attention to your paid lessons, you're going to just keep losing. Um, there's a reason why I establish a criteria, and that is so that I can have my three perfect trades every single day and make money and walk away. Yes, there are times, when you kind of just you're sitting there and you can't see anything. You do not see market conditions that are prime for you to be able to trade. And so what we start doing is we start breaking criteria. I would start looking at something else. I might say, hey, look, Bollinger Bands are not. Look, it's close enough somewhere here. It's not significantly oversold, so I'm still going to go in anyway. You don't want to be doing that. If you've established a criteria for yourself, stick to it because it's there for a reason. It's there so you can have your three perfect trades every single day. Do not break it. Okay. Now, a few things that people I think have started to notice but haven't been paying that much attention to. This bit here, number 4, do not trade when Bollinger Bands are constricting. I'm going to try and find a place. The reason being is this: when you find Bollinger Bands pretty much hugging each other, what's going on there is that there is not that much market activity happening. Look at some of this stuff. This is still okay. What you find is that there's very little market activity, and even if you enter a trade, there might not be enough movement for you to be able to win a trade. Look at things like this. This is just way too close. You would not be trading in these conditions. Um, and I've found people that have been jumping in, and they end up either. Sorry about that, Miss. It's either where they're winning or losing by just a few micro pips. Guys, the idea is to take trades where you're going to win significant amount. Okay, so please do not take trades when Bollinger Bands are constricting. Number 5, do not trade when Bollinger Bands are spreading apart. Now, this is a perfect example. What you may find oftentimes is this: when Bollinger Bands are close together or reasonably close together, and what you find is that they start going in opposite directions, like this here. See this here? What that usually means is that there's a trend about to start. And, it's some people like to trade reversals here. Other people want to go with the trend here. The key thing to note here is this. You have no idea what's going to happen. This is going to go up. No one really knows that this is going to come back down here. No one really knows that this is going to keep going back up here, especially if there was no news around here. So we don't know what's happened, what's caused this market condition to happen. It might have been the president of a country speaking somewhere, or the head of the International Monetary Fund. Maybe she said something in an interview or didn't say something in an interview, and that would have affected the market to go crazy for a while. Now, if you see this happening, the spread happening, Bollinger Bands are spreading in opposite directions, take a breather, go for a walk. Do not trade around there. Okay. Gradually, you can possibly try and come up with strategies that you can use around these areas, but you will always get plenty of other opportunities throughout your trading day. This is very highly risky. Okay. Also, this is also an amazing example. Oftentimes, what I find is people see this happening, and what they'll be going for is some sort of a reversal to kind of come into to play. and they'll say, look, I'm going to go, this is a significant high. I don't know why the markets jump, but I'm going to now jump in and do a put for whatever time period. Okay, now this is the 1 minute chart. If someone was to jump in here and do a put for an hour, even, when you count 60 candles out here, you'd be very lucky if you won. There might be a slight win, but there's every chance that this would have just hovered sideways. Look at this. This did not reverse back down here. And so whoever would have done reversals here, they would have lost that money. So this is what you do. When you're doing this and you have no idea what it is, whether it's news or otherwise, um, don't jump into this. Um, it's just it's a no-no. The other thing to note is, see how the Bollinger Bands came back together and it constricted for a little bit and then opened up again. Again, here, when you're at this point here, you don't know what's going to happen all around here. So stay away from the markets. Do not trade them. Okay? Um, that was number 5. So do not trade when Bollinger Bands are spreading apart. Number 6, do not trade reversals when there is a spike or fall without news. I think we've just covered that one. It's to say, around this time here, I think I remember this. There was no news. This has happened a number of times when I've sat back and I've watched this and I've wondered what's going on. You check investing.com or forexfactory.com and there's no actual news that supports this. So don't trade it. It's simple as that, because we have no idea what's causing that. We have no idea what to do with it, where that's going to end up. So again, don't trade reversals when there's a spike or fall without news. Also, if there is news, I think it takes a little bit of experience to be able to trade reversals on that. Just from my experiences alone, certain currencies like Euro USD, they have a habit of sometimes doing a very slight reversal and then bouncing back up, skyrocketing by a few hundred pips. I've noticed the AUD USD, for example, when it tanks, it doesn't have often the buying power to be able to rise back up in the short period of time. So I tend to say I'm going to stay away from that entirely. And just to add to that, guys, almost any entry, whether it be a put or a call, is in essence a winner. The only thing that determines whether it is a winner or not is time. So it's all about entry, timing your entry and timing your exit. And I think that's what is key to trading, knowing that this is how it all works. The top of the candle is where you want to get into if you want to do a put, or at the bottom if you want to do a call. Now, the issue is this: when do you know this is the top of the bottom? Yes, we can say Bollinger Bands up here is a resistance and down here is support, but you often find that Bollinger Bands can be broken. Look at it in this case. We would have thought that candles would have just hovered around here, but it's the candles that force the Bollinger Bands, the new resistance and the new support to be created. So we have no idea at times that what is going to happen in the market. So be careful there. Number 7. Now, this is the biggest one in my opinion, and a lot of people tend to ignore that because they tie this in with number 2, which is chasing trades. This is key, guys. Do not trade against the trend. Extremely important. For most of you, you already know. The trend for me is, see this blue line here? By the way, this orange colored lines, they are the GMMA indicator. I've added that on there because I quite like this. It's much better than the blue trend line. And then this blue one here is the moving average. Now, the moving average gives me a better indication of minute by minute changes. The trend line gives me an overall. These orange lines, I quite like it. So if anyone's interested, certainly message me and I will send you the file. What this actually represents here is this. When they're kind of bottled up together, bunched up together, what you find is that the trend is just going sideways. There's not much happening there. But when you find that these orange lines start spreading apart, this is an indication that a strong trend is developing. So when I see this happening here, there's a strong developing going upwards. And then see how the trend has actually started to slow down here. And then as we're going forward, trend's getting stronger. So this gives me an idea of the sorts of trades that I could actually take. Quite nice. So don't trade against it. If look at this, the trend is going down. It's a strong one. Um, I would not do a trend reversal anywhere here. Even with this, notice how the reversal did happen, but I've got no way of guaranteeing or knowing that this reversal is actually happening. Now, this is what is absolutely key because you don't want to be losing money. Okay, so don't trade against the trend. Very important, guys. Next on the list, do not trade super single indicators without doing your analysis. I think this is key for a lot of people that have just bought the indicator and they set this up. They may do, some of us just jump on at the right time and they'll do one or two trades and say, hey, this is fantastic. So I'm just going to, every single time this comes up, I'm just going to jump on. Big mistake, guys. Establish your criteria, and the criteria may be something as simple as candle touching the Bollinger Bands, super signal, um, your stochastics being either oversold or overbought. If you're using the worm indicator as well, then that also, in this case, I wouldn't want this to be at the highest point, including stochastics to be much higher and be overbought. And then also look at Bollinger Bands distance apart, what the trend is doing as such. Those are parts of my criteria, things that I would look at. I would probably look at 5-minute chart. I will look at whether news is happening or not, and then I will determine whether or not I want to enter this trade. Do not just enter the trade just because there's a signal there. Okay. Often, yes, you're going to find great wins doing this, but oftentimes you're also going to find that something forces market conditions to change and you end up losing money. Next one. Do not jump onto the next trade after losing a trade. I think this is extremely important, guys. Write down, write down all your winners and write down all your losers. And with your losers, I would write down very quickly mistakes that I've found. So if I do a trade and I've lost this trade, I would quickly look and say, what did I miss? Did I notice that? Oh, you know what? Stochastics weren't where I wanted it to be. Or when you see, for example, like this sort of breakout just started to happen, and say, oh yeah, look, I totally forgot. I didn't notice that there was this bend on the Bollinger Band. These are lessons. It's when you lose a trade, you want to learn from that loss so that you don't make the same mistake and you don't lose that trade ever again. Um, some of the best traders in the world, people that I've actually known as well, they all have journals, guys. They write everything down. They'll write down what they did really well, what they discovered with their winning trades, and they also what they discovered with their losing trades. And they swear by it. I swear by it as well. That it teaches me to become a better trader. Because at the end of the day, the whole idea is for me to do a whole heap of perfect trades every single day, win a crap load of money, and then head out to the beach and do whatever I want to do. So please don't just jump onto the next trade without analyzing what went wrong if you had a losing trade. Okay. Number 10, do not be so hard on yourself. There are so many people, when you look at this for the first time, even if they've tried it out for a week or two, there's frustrations. There's people posting, for example, when someone posts, I've had 10 winning trades today, and they have a snapshot of their trades, the broker accounts. And you may say, hey, this person's able to do 10 trades. Why can't I? What's wrong with me? Why can't I spot this? Why can't I see these perfect trades? What's wrong with my eyesight? What's wrong with my criteria? How come I can't do this? Maybe I'm not good enough. Maybe this is just too hard for me. Don't be so hard on yourself, because there's a lot of things to look at. One is this, that not often are you going to find people that actually post either videos or screenshots of of their losing trades. They are going to show you their winners only. No one's going to show you their losers. Okay. Not often are people going to come up to you and say, hey, I've won 3 perfect trades today. Fantastic. But I've also lost 7. You know, silly mistakes. I stoned it. I went in one currency pair and I did it 5 times. A silly mistake. I didn't notice this and I lost it. One of the things I will do, I promise, is when the market's open, I am going to take 10 trades that I'm going to almost guarantee are going to be losers. So you get an idea of, it won't be live, mind you, I'll do that on demo. Just so you get an idea of what it kind of feels like. And I encourage you to do this as well. I did it myself, and I still do it, mind you. I have a demo account with spot option. I play with it every week. What I do is I will jump on there and I'll say, okay, here's an opportunity. I'm just going to jump onto it. This doesn't look quite right. The stochastics are here. I wouldn't take this trade in a live trade, but I'm going to do it anyway. Why? Because I probably have a trigger. Probably am trigger happy to some extent, and I'll say I should have taken that trade. But if I've just taken that trade on demo, I can see, hey, this would have lost, and so that confirms my own feelings as to why I wouldn't have done it on a live account. So look, practice on your demo. My focus is to do my 3 perfect trades in a live account every day. But even after that, if I'm getting perfect setups, I will do that on demo. I wouldn't do it on a live account because I still want to just follow my criteria. My goal is to do, $1,000, $2,000 trades or $5,000 trades every single day and then just walk away. Because at the end of the day, I just want to constantly make a very nice income from it. I don't want to gamble. Okay, so know, guys, that there's nothing wrong with you. Know that you can actually do this. Everyone can. Okay, it's not difficult. There isn't that anything there that's significant to learn. And also know that the markets are, we can say they're predictable to some extent, but I'd largely say the markets are unpredictable. Why? Because there's just way too many variables. There's fundamentals, but there's also fundamentals that you won't see on a website. There are going to be people's opinions throughout the day that's going to affect the market. There's going to be, sometimes they say the president or a prime minister or a minister or someone sneezed and the market took a bit of a turn. All of that is going to happen, and at one given point in time, you won't know what things can influence the market. So it's okay, if you've been on wrong times of the day, or you've just done 1 week of trading and things have gone wrong, it's okay. Throughout the year, there are different cycles. Right now, reporting season is happening. So what you may find is the market's fluctuating all over the place because of company returns and things like that. It's all okay. Connect with people. Jump on, send me a message. There's a whole heap of people on the Facebook page. Contact them. Have a chat because it's going to help you feel better. Okay. And lastly, and I think we've covered this many times. Do not trade when there's news on. Okay. Unless you really know how to trade news, unless you really know the impact that the news is about to have on the market, I would stay away from it. Sometimes, you may have an idea. I have traded news on off and on. Sometimes I've nailed it. And there are times, guys, when I've tried to do a reversal on news, especially in Euro USD, and I've done it on AUD USD. And what you find is that the reversal just never comes. And you think, what the hell? I've waited for an hour and a half, and this damn thing just couldn't bounce back up again. And that's simply because, guys, there's probably other influences on that piece of news. There's other influences on the market at that point in time. And so there's got to be something, a motivator for it to lift back up. And so for that reason, we say it's possibly better for you to stay away from news. Watch it, certainly. Watch how quickly it spikes. Sometimes you will see the market spike like a few hundred pips in a matter of seconds. And that is as scary as hell, but at the same time, it's sometimes I want to jump in and do a 60-second trend follow when there's a news release. Sometimes, I'm just staring at the screen and you see this spike go up and down and there's this massive shadow and you think, wow, I have no idea what just happened and how quickly did this happen. Realize, guys, that the institutional investors, they have direct feeds and direct lines. They get the news a little bit sooner than we do. Also, their entry is much quicker than ours. You know, we're going through this third-party broker. Most of the institutional investors, they're linked directly, and so what we're pretty much doing is just following them. That's our goal. We're tiny investors. There's hundreds of, you know, it's the foreign exchange market is $1 trillion market. Actually, much larger. I think it was 5 trillion or something. And so, for that matter, you know, we don't want to be risking our $100 or 500 or even $1,000. It's nothing compared to the size of the market. So, guys, I hope this helps. I know there's a lot more things that you should avoid when you're trading, but you know, well, actually, let me just throw one more thing in. If you're trading, you see stochastics behave like this, or even with the worm, you know, it's just up and down, up and down, up and down like this. I would not enter trades around that time. It's simply because the market's confused. It doesn't know what it's doing. I would enter when there's nice curves like this, you know, at this point here or these points here. If it's like this constantly, so if I came into the market and I was somewhere here and I see this happening, I'd stay away for a while. I'll go check out some other currency pair, but I'd stay away for a while. Okay, now that's it. You know, if there's issues, guys, if you have questions about any of this sort of stuff, if any of you want the GMMA indicator here, please just drop me a message and I'll send that to you. Okay, all right, bye.